whatever could go wrong has gone wrong over from Friday up until this morning, Nikunj, literally.
Yeah, now the rescue process has started.
Yeah.
So frankly, if we get into what went wrong on Friday and what happened and why and what led to the collapse of SVP, I think that's passé. What is important here is that the US administration has stepped in. They're trying to contain or they're trying to do whatever it takes kind of a strategy to stem the systemic risk. So it's more like a bailout, it's more like a backstop which will protect first, very important, the depositors, and B, the institutions they have taken loan from SVP, they will be given a guarantee line and their loans in a sense would be honored. This is the fallout of high interest rate regime and this is the fallout of mismanagement of asset liability mismatch. I guess the point which markets are worried about, does it stop here? If does not stop here, could we see a snowball effect? That's one. B, unfortunately, just when it appeared that things were looking better and stable and calm for our markets, this news on a global front will act as a catalyst to trigger the market slide. And that I think is something which we'll have to unfortunately deal with.
Oh yeah, just in case you're worrying or rather wondering what really went by from the weekend up until now, Silicon Valley Bank, SVB, all that talk in the town about this bank has collapsed. Global markets clearly have seen a sell-off because of that. And the Dow on Friday itself was down a solid 345 odd points. Not just that, European markets as well have seen quite a bit of fall. They too were down about 1.5% or so. Remember, while we were trading on Friday itself, they opened quite sharply lower, and that's really been the case. In fact, a lot of global voices as well have come in and talked about SVB and the kind of contagion impact that it could have. And, the key amongst them has been Treasury Secretary Janet Yellen, who said just yesterday that the US government will not bail out SVB. Very categorical steps coming in there. FIIs for our markets, they've been net sellers, and it was no different on Friday as well. In fact, it was the largest quantum, that to the tune of about 2,061 crore rupees. And remember, on Friday itself, the Nifty closed below its 200 DMA of 17,427. So the US government has indeed stepped in. They were the 16th largest lender in the US biggest bank failure since Washington Mutual. The US Fed is going to be holding an emergency meeting as well as of today to perhaps try and measure if at all SVB could have a contagion impact or no. Although Janet Yellen has made it very categorical that the US government is not going to be bailing out SVB. Of course, Elon Musk has evinced interest and he says that he's willing to buy SVB.
It's not going to happen.
That's Twitter talk.
Yeah, that's not going to happen. But no, I mean, the point what we just discussed, it was the 16th largest lender, and when interest rates go higher, there will be a casualty if you don't do your asset liability mismatch. What is important here is the government action. It's not a bailout. Government, US administration has gone out and said, look, we'll safeguard the depositors. We'll ensure that if there is the loan given to the current institution by this institution to individuals and to companies would be protected at least for next 1 year. And see, they've also shut down one more bank, Signature Bank, because it will have a problem in terms of a systemic risk because they've been lending a lot to the crypto. So what is happening in the market? I mean, that's more important. Cryptocurrency and especially Bitcoin has bounced back. B, SGX is off from the day's low. Second, Asian markets are not exactly, getting smashed here and there. So the selling in the market, I think, or the market mood is very measured. There you go, actually SGX is in the green. That is one part of the story that unlike what we saw, Hong Kong is also trading with a positive bias. Japan.
But I think, Nikunj, the bigger point is whether or not this is going to have a contagion impact on banks, sentiment-wise. I mean, in the US itself, we've seen last week JP Morgan falling 7%, Wells Fargo was down 12%, BofA was down 11%, and similar was the price action on a First Republic, a PacWest, or for that matter, Citigroup as well, which fell 8%. For our markets as well, the sentiment is brittle. Yes, the SGX Nifty is indicating a mildly positive start right now and a stable one at that. But sentiment-wise, when the markets across the globe are all that brittle, we've seen a slide come in for banking names even back home.
Yeah, so let's talk about first India.
Yeah.
Just when it appears that Indian markets will not see any kind of a wrinkle, nothing will happen globally, you are dealing with one issue after the another issue. Market just got settled a week ago when Rajiv Jain and his fund stepped in to rescue Adani Group of
Yeah.
stocks. Then this news comes in. Before that, you had this mass selling which was happening in by foreign institutional investors, and that also stemmed. The problem with this market, Aisha, is just that when it appears that okay, the worst is behind us, things now will look up, globally things will settle down, the impact of inflation, impact of Ukraine, impact of Adani, the domino effect, what it has created, markets have digested that. They have to deal with another, another news. Now, what has Friday's price action done? Friday's price action has decisively put the market back into the grip of the bear. Uh, so I think this Monday morning, even though there is not abundant red on the screen and there is no panic per se, it is advantage bears. The technical positioning of the market, the mood point of the market, the levels at which you got pushed back, the bears now can really, can smell that
There's an
there's
opportunity.
an opportunity
Yeah.
for them, and that is the problem, because this market up until now has managed to bear the storm, whether it was Adani, whether it was FI selling or something on the inflation front. Now, if the markets are going back to the lower end of the technicals, desire to trade long is just not there. The mood is just not supportive. Everybody is in wait and watch mode. So the collateral damage may not be that high, but the triggers are just not there which will generate upside momentum. Markets in the short term is sentiment and confidence. And when they both are not on your side, it's impossible to make a case for bounce back. So bulls will find it difficult to engineer a rally. Let me put it this way.
Yeah, that clearly